Question 1. Which of the following statements best describes the principle of insurable interest in property insurance? A. Insurable interest exists only when the insured holds legal ownership of the property. B. Insurable interest is not required for the policy to be valid, but it affects the payout of the claim. C. Insurable interest is required at the time of policy issuance and at the time of a claim. D. Insurable interest only applies when the insured has financial interest in the property being insured. Answer: C. Insurable interest is required at the time of policy issuance and at the time of a claim. Explanation: Insurable interest refers to the financial stake or legal right in a property or life which justifies the purchase of insurance. In property insurance, the insured must have insurable interest in the property both at the time the policy is issued and at the time a claim occurs. This requirement ensures that insurance serves as protection rather than a speculative investment. If a person does not have insurable interest, the insurance policy can be voided. This is part of the core principle of insurance, which aims to protect individuals from financial loss. While the other answers are incorrect, while ownership often implies insurable interest, it's not strictly limited to legal ownership. A financial stake or interest in the property, such as a lien or lease, can also qualify. B. Insurable interest is essential for the policy's validity, and it directly affects the payout. Without it, the claim would be denied. D. Insurable interest is a broader concept and doesn't only apply to financial interest. Ownership or another vested interest can also justify the coverage. Question 2. Mr. Green was in a car accident where another driver was at fault. Mr. Green has comprehensive car insurance coverage with a $500 deductible. The total damages to his vehicle amount to $4,500. What is Mr. Green's out-of-pocket cost? A. $4,500. B. $4,000. C. $500. D. $4,500 minus the deductible. Answer: B. $4,000. Explanation: In this situation, Mr. Green has a comprehensive car insurance policy with a deductible of $500. The total damages to his vehicle are $4,500. In most cases, the deductible is subtracted from the total claim amount before insurance pays out. Therefore, the insurance will pay $4,000, $4,500, $500, and Mr. Green will be responsible for the $500 deductible. While the other answers are incorrect, A. The total damage cost, $4,500, is not the amount Mr. Green will pay, as the deductible is deducted from the claim amount. C. The deductible is the amount Mr. Green must pay, but he is still entitled to the remaining coverage. D. While the deductible is subtracted from the total damage cost, the insurance will cover the remaining $4,000, not the full $4,500. Question 3. Scenario-based MS. Adams recently purchased a homeowner's insurance policy. During a heavy rainstorm, her basement flooded, causing significant damage to her property. The insurance policy excludes flooding but does include coverage for water damage from burst pipes. After an investigation, it is determined that the floodwater entered through a broken pipe which caused the damage. How should the insurance adjust to proceed? A. Deny the claim entirely due to the flood exclusion clause. B. Cover the damages under the policy as the cause of the damage was the broken pipe, not the flood itself. C. Ask MS. Adams to pay the deductible for the flood damage and cover the pipe-related damage. D. Request additional documentation of the broken pipe and investigate further before making a decision. Answer: B. Cover the damages under the policy as the cause of the damage was the broken pipe, not the flood itself. Explanation: In this scenario, the homeowner's insurance policy excludes flood damage but includes coverage for water damage caused by burst pipes. Although the flooding occurred, the source of the water damage was a broken pipe. As a result, the damage falls within the policy's covered perils, water damage from pipes, and not the excluded peril, flooding. The adjuster should focus on the cause of the loss, which in this case is the burst pipe, and approve the claim accordingly. While the other answers are incorrect, A. The claim should not be denied because the exclusion only applies to flooding, not water damage from pipes. C. There is no need to ask for a deductible payment for flood-related damage, as the damages are covered under the pipe-related water damage clause. D. While additional documentation may be necessary to confirm the details, the cause of the damage, broken pipe, has already been identified and the claim should proceed based on this understanding. These questions and their explanations help assess the candidate's understanding of the claims process, coverage interpretation, and legal principles in Georgia, especially in complex scenarios involving exclusions and deductibles. Question 4. Which of the following is an example of a moral hazard in insurance? A. A person's home is damaged due to an accidental fire caused by a faulty appliance. B. A driver is involved in an accident because they were speeding in poor weather conditions. C. A policyholder intentionally sets fire to their own property to collect the insurance payout. D. A company experiences financial loss due to market downturns affecting their business property. Answer: C. A policyholder intentionally sets fire to their own property to collect the insurance payout. Explanation: a moral hazard refers to the behavior of individuals or entities that may change when they are insulated from risk, often leading them to engage in risky or unethical behavior. In this case, setting fire to one's property to collect the insurance payout is an example of fraud or intentional harm to benefit from the policy. This behavior is considered a moral hazard because it involves dishonest intent to cause a loss for personal gain. While the other answers are incorrect, an accidental fire due to faulty appliances is a legitimate claim but does not involve any moral hazard. B. Speeding in poor weather conditions is an example of a physical hazard, unsafe condition, but not a moral hazard. D. Financial losses due to market downturns do not involve any intentional risk-taking behavior and are unrelated to insurance coverage or moral hazard. Question 5. Which of the following actions would most likely be considered a violation of the Georgia Insurance Code in relation to an insurance adjuster's duties? A. An adjuster accepts a gift from a claimant for helping settle their claim. B. An adjuster works with a contractor to obtain an estimate for property damage. C. An adjuster discusses the claim details with the insurance company prior to making a decision. D. An adjuster interviews a witness to gather more information regarding the incident. Answer: A. An adjuster accepts a gift from a claimant for helping settle their claim. Explanation: according to the Georgia Insurance Code and ethical guidelines for adjusters, accepting gifts, kickbacks, or any form of compensation from claimants for services provided during the claims process is a conflict of interest and is considered unethical and illegal. Insurance adjusters are required to remain impartial and avoid any actions that could be perceived as a conflict of interest. Accepting gifts could potentially bias the adjuster's judgment and is a violation of both legal and ethical standards in the insurance industry. Why the other answers are incorrect. B. It is standard for an adjuster to work with contractors to obtain estimates and gather relevant data for the claims process. C. Discussing claim details with the insurance company is necessary for collaboration, provided the adjuster remains objective. D. Interviewing witnesses is a routine and necessary part of the investigation process to gather information and establish the facts of a claim. Question 6. In the context of a casualty claim, which of the following would be the primary focus of the claims adjuster? A. Verifying the policyholder's medical records. B. Determining the extent of the physical damages to the property. C. Assessing the liability of the responsible party. D. Investigating the financial stability of the policyholder. Answer: C. Assessing the liability of the responsible party. Explanation: in a casualty claim, such as personal injury or bodily injury claims, the primary focus of the adjuster is determining the liability of the responsible party. This involves investigating the circumstances of the incident, identifying who is at fault, and evaluating the extent of damages to determine the amount of compensation due. In the case of casualty claims, liability is a critical factor in assessing the claim's validity and determining the payout. While the other answers are incorrect, medical records are important in health claims or workers' compensation cases, but not the primary focus in casualty claims unless they are related to bodily injury or personal injury claims. B. Property damage is the primary concern in property claims, not casualty claims, which deal with liability for injuries or damage caused by an event. D. Investigating the policyholder's financial stability is not typically a focus of casualty claims, which are more concerned with the events leading to the claim and liability. Question 7. Scenario-based. Mr. Turner owns a small retail store that was damaged during a robbery. The store's security system was not functioning at the time of the theft due to recent technical failure. The robbery caused $12,000 worth of damage to merchandise and fixtures. Mr. Turner files a claim under his business property insurance policy, but the insurer denies the claim due to a lack of proper security. Which of the following should the insurance adjuster consider in assessing Mr. Turner's claim? A. The adjuster should immediately reject the claim as the policy clearly excludes claims related to lack of security. B. The adjuster should investigate the technical failure of the security system and evaluate whether the policy's exclusion for lack of security is enforceable in this case. C. The adjuster should approve the claim since Mr. Turner could not have reasonably anticipated the failure of the security system. D. The adjuster should recommend that Mr. Turner file a claim under his homeowner's insurance policy instead. Answer: B. The adjuster should investigate the technical failure of the security system and evaluate whether the policy's exclusion for lack of security is enforceable in this case. Explanation. In this scenario, the key consideration for the adjuster is the technical failure of the security system. The insurance policy may include an exclusion for theft when the security system is not functional, but the adjuster must investigate the cause of the failure. If the failure was due to circumstances beyond Mr. Turner's control, e.g., faulty equipment, delayed maintenance, or other unforeseen issues, the adjuster may find that the exclusion should not apply. Therefore, it is essential for the adjuster to thoroughly assess the facts and determine whether the exclusion is enforceable or whether an exception might apply. While the other answers are incorrect, an immediate rejection of the claim without investigation would be premature, as the cause of the security failure needs to be evaluated. C. While Mr. Turner could not have predicted the failure, the adjuster must focus on the policy terms and exclusions, not just the reasonableness of the failure. D. The homeowner's insurance policy would not typically cover business property losses, so Mr. Turner should not be advised to file a claim under that policy. Question 8. Which of the following would be considered an unfair trade practice under Georgia insurance law? A. An insurance adjuster providing a written estimate for repair costs before the policyholder has formally accepted the offer. B. An insurance company offering a policy renewal with a premium increase based on a higher risk assessment. C. An insurance company failing to inform a policyholder about the exclusion of flood coverage after a hurricane causes damage to their property. D. An insurance adjuster offering a claim settlement without prior approval from the insurance company. Answer. C. An insurance company failing to inform a policyholder about the exclusion of flood coverage after a hurricane causes damage to their property. Explanation. Under Georgia's insurance laws and the Fair Claims Settlement Practices Act, it is considered an unfair trade practice for an insurance company to fail to inform a policyholder about significant exclusions in their policy. In this case, if the policyholder's property was damaged due to flooding, which may not be covered under their standard homeowner's policy, and the insurer did not inform the policyholder about the exclusion of flood coverage, this could be considered misrepresentation or failure to disclose material information. Such actions undermine consumer protection and violate the law. While the other answers are incorrect, it is normal for an adjuster to provide a written estimate for repair costs, and doing so before a formal offer is accepted is not necessarily unfair. B. A premium increase based on an updated risk assessment is a legal practice as long as it follows the terms of the policy and regulatory guidelines. D. Offering a claim settlement without approval from the insurance company could be improper but is not inherently an unfair trade practice unless it involves fraudulent actions. Question 9. In the event of a catastrophic loss, what is the primary role of an insurance adjuster when assessing the damages? A. To investigate and determine the cause of the loss. B. To immediately approve the claims without delay to ensure fast payouts. C. To help the claimant negotiate with third-party vendors for repairs. D. To evaluate the financial stability of the claimant to ensure the claim is valid. Answer. A. To investigate and determine the cause of the loss. Explanation. When dealing with a catastrophic loss, such as a large-scale disaster or event, the adjuster's primary responsibility is to investigate the cause of the loss. This includes determining whether the damage falls under the policy's coverage and assessing the extent of the loss. Only after the investigation is complete can the adjuster proceed with the next steps, which may involve estimating the loss and negotiating with the claimant for settlement. Question 10. Which of the following best describes an example of an occurrence in an insurance policy? A. A fire that causes damage to a commercial building, which happens after the policy expires. B. A car accident involving the insured, where the damage occurs during the policy period. C. A personal injury lawsuit that is filed after the insured dies. D. A flood that occurs 2 years after the policy expires. Answer. B. A car accident involving the insured where the damage occurs during the policy period. Explanation. An occurrence in an insurance policy is defined as an event or series of events that lead to damage or injury occurring during the term of the policy. In this case, the car accident is covered because it happened during the policy period, making it a valid occurrence for insurance purposes. While the other answers are incorrect, a damage caused after the policy expires would not be covered as the incident falls outside the policy period. C. A personal injury lawsuit may be tied to an incident that occurred while the insured was alive, so it may not be covered if filed posthumously depending on the specifics of the policy. D. A flood occurring after the policy expires is outside the scope of coverage. Question 11. Which of the following statements is true regarding the duty to defend in liability insurance? A. The insurer must defend the insured only if the claim is likely to be successful. B. The insurer's duty to defend is broader than its duty to indemnify. C. The duty to defend ends as soon as the policyholder is found liable. D. The insurer is only required to defend the insured if it agrees that the claim is valid. Answer: B. The insurer's duty to defend is broader than its duty to indemnify. Explanation: the duty to defend is an obligation of the insurer to provide legal defense against claims, regardless of the validity of the claim. This duty is broader than the duty to indemnify, which involves paying for covered claims, even if a claim is not likely to be successful or is excluded under the policy. The insurer must defend the insured in litigation unless there is a clear lack of coverage. While the other answers are incorrect, A. The duty to defend is not dependent on the likelihood of success. C. The duty to defend does not end when liability is found. It continues until the case is resolved. D. The insurer must defend regardless of whether the insurer agrees the claim is valid. Question 12. What is the primary purpose of a waiver of subrogation clause in an insurance contract? A. To waive the insured's right to sue the insurer. B. To prevent the insurer from recovering claims payments from third parties responsible for the damage. C. To limit the insurer's liability for certain types of claims. D. To allow the insured to file claims with multiple insurers for the same loss. Answer: B. To prevent the insurer from recovering claims payments from third parties responsible for the damage. Explanation: the waiver of subrogation prevents the insurer from seeking reimbursement from a third party who may be liable for the loss. The insurer waives its right to subrogate, meaning it cannot pursue legal action against the responsible third party for recovery of the payment made to the insured. While the other answers are incorrect, A. The clause does not waive the insured's rights to sue the insurer, but limits the insurer's ability to recover from third parties. C. It does not limit the insurer's liability, but prevents recovery from third parties. D. It does not allow the insured to file multiple claims for the same loss. Question 13. Which of the following would be considered an exclusion under a standard homeowner's insurance policy? A. Fire damage to the home caused by a lightning strike. B. Theft of personal property from inside the home. C. Damage caused by an earthquake. D. Water damage due to a leaking roof. Answer: C. Damage caused by an earthquake. Explanation: a standard homeowner's insurance policy typically excludes earthquake damage, which would require a separate policy or rider for coverage. Earthquakes are considered a catastrophic event and are typically not covered under standard policies. While the other answers are incorrect, A. Fire damage due to lightning is generally covered under a standard homeowner's policy. B. Theft of personal property is typically covered by homeowners insurance, assuming the loss is reported promptly. D. Water damage due to a leaking roof is generally covered under standard policies, provided the damage is not due to neglect. Question 14. If an insurance policy includes a pro rata cancellation clause, what does it mean for the insured when they cancel their policy early? A. The insured will be refunded a portion of the premium calculated based on the length of time the policy was in force. B. The insurer will charge a penalty fee to the insured for early cancellation. C. The insured will not be refunded any premium if they cancel the policy early. D. The insurer will refund the entire premium if the policy is cancelled within the first 30 days. Answer: A. The insured will be refunded a portion of the premium calculated based on the length of time the policy was in force. Explanation: a pro rata cancellation clause allows the insurer to refund the insured a portion of the premium if the policy is cancelled early. The refund is typically based on the percentage of the policy term that remains, calculated from the cancellation date. While the other answers are incorrect, B. A penalty fee is not typically charged under pro rata cancellation clauses. C. A refund is provided, but only the unearned premium for the remaining time is refunded. D. The insurer does not refund the entire premium unless a full refund clause is in place, which is rare. Question 15. In Georgia, how long does an insurer have to acknowledge the receipt of a claim? A. 24 hours. B. 48 hours. C. 15 days. D. 30 days. Answer: C. 15 days. Explanation: under Georgia law, an insurance company is required to acknowledge the receipt of a claim within 15 days. This is part of the state's regulations to ensure that claims are handled promptly and fairly. The acknowledgement can be in the form of a written response or other direct communication. While the other answers are incorrect, A and B are not required by Georgia law. The timely responses are encouraged. D. The 30-day period applies to other aspects of the claims process, but not for initial acknowledgement. Question 16. Which of the following best describes the concept of replacement cost in insurance? A. The amount the insurer pays after deducting depreciation. B. The amount needed to repair or replace property with similar quality and kind without considering depreciation. C. The market value of the property at the time of the loss. D. The amount the insured originally paid for the property. Answer: B. The amount needed to repair or replace property with similar quality and kind without considering depreciation. Explanation: replacement cost is the amount necessary to replace or repair property with the same or similar kind and quality without factoring in depreciation. This coverage ensures the insured receives sufficient compensation to fully restore the damaged property to its original condition. Why the other answers are incorrect: A. Depreciation is factored into actual cash value SCV policies, not replacement cost policies. C. Market value accounts for depreciation and external factors, not the replacement cost. D. The original purchase price does not reflect the current cost to replace the property. Question 17. What type of policy is designed to cover losses that result from a business's inability to operate due to an insured peril such as fire or flood? A. General liability insurance. B. Business interruption insurance. C. Workers' compensation insurance. D. Commercial property insurance. Answer: B. Business interruption insurance. Explanation: business interruption insurance is designed to cover the financial losses a business suffers due to the inability to operate following an insured event, such as fire, flood, or other covered perils. It helps compensate for lost income and covers operational costs until the business is up and running again. Why the other answers are incorrect: A. General liability insurance covers third-party bodily injury, property damage, or personal injury claims, but not loss of income. C. Workers' compensation insurance covers employees' injuries or illnesses, but does not address business income loss. D. Commercial property insurance covers property damage, but does not typically address income loss. Question 18. Under Georgia law, what is the maximum time an insurer has to pay or deny a claim after receiving all necessary documentation from the insured? A. 30 days. B. 45 days. C. 60 days. D. 90 days. Answer: A. 30 days. Explanation: in Georgia, insurers must pay or deny a claim within 30 days after receiving all necessary documentation from the insured. This requirement is part of the state's efforts to ensure that insurance claims are processed in a timely manner and to protect consumers from unnecessary delays. Why the other answers are incorrect: B. A 45-day period does not apply under Georgia law for this specific requirement. C. A 60-day period is also not applicable. Timely claims processing is mandated within 30 days. D. A 90-day period is too long. The state ensures a quicker resolution to claims to protect insured parties. Question 19. Which of the following is an example of a peril in an insurance policy? A. Theft. B. Fire. C. Water damage. D. Liability. Answer: B. Fire. Explanation: a peril is an event or occurrence that causes damage or loss, and it is typically specified in the insurance policy. Fire is a common peril covered by many property and casualty policies. Why the other answers are incorrect: A. Theft is a cause of loss, but refers to a specific type of loss, not a peril. C. Water damage is the result of a peril, such as a burst pipe or flood, but not a peril itself. D. Liability is not a peril, but rather legal responsibility for damage or injury caused to others. Question 20. What is the purpose of an exclusion in an insurance policy? A. To clarify what the insurer will cover. B. To specify certain types of coverage that are optional. C. To identify events or circumstances that are not covered by the policy. D. To extend the coverage to new situations not covered in the original policy. Answer: C. To identify events or circumstances that are not covered by the policy. Explanation: an exclusion in an insurance policy lists specific situations or conditions that the policy will not cover. Common exclusions include intentional acts, wear and tear, or certain types of natural disasters. Exclusions help to define the boundaries of the policy's coverage. Why the other answers are incorrect: A. While exclusions clarify what is not covered, they do not specify what is covered. B. Optional coverages are addressed as add-ons or endorsements, not exclusions. D. Extensions of coverage are typically provided as endorsements, not exclusions. Question 21. Which of the following types of insurance would cover damage to the insured's vehicle resulting from a collision with another car? A. Comprehensive insurance. B. Collision insurance. C. Personal injury protection insurance. D. Uninsured motorist insurance. Answer: B. Collision insurance. Explanation: collision insurance covers the damage to the insured's vehicle resulting from a collision with another vehicle or object, regardless of who is at fault. This is a type of coverage typically added to an auto insurance policy, while the other answers are incorrect. A comprehensive insurance covers non-collision incidents such as theft, vandalism, or weather-related damage. C. Personal injury protection covers medical expenses and lost wages, not vehicle damage. D. Uninsured motorist insurance provides coverage when the insured is involved in an accident with an uninsured driver, but it does not cover vehicle damage from a collision. Question 22. Which of the following actions should an insurance adjuster take when determining the value of damaged property? A. Apply the policy's deductible to the estimated loss. B. Deduct depreciation from the replacement cost of the property. C. Only use the original cost of the property as the basis for the claim. D. Reimburse the policyholder based on the fair market value of the property. Answer. B. Deduct depreciation from the replacement cost of the property. Explanation. When determining the value of damaged property, an adjuster may deduct depreciation from the replacement cost unless the policy specifically covers replacement cost value RCV, which would not take depreciation into account. Actual cash value SCV policies typically factor in depreciation, reducing the reimbursement amount, while the other answers are incorrect. A. The deductible is subtracted from the claim payment but not from the estimated loss. C. Using the original cost without considering depreciation is only applicable in certain cases, such as with policies that cover replacement cost without depreciation. D. Fair market value may be used in some policies, but it is not the typical basis for property insurance claims. Question 23. Which of the following is true regarding the moral hazard in insurance? A. It refers to the physical damage to property that occurs during an insured event. B. It involves an insured taking extra risks because they know they are covered by insurance. C. It is a term used to describe how much coverage is needed for a specific risk. D. It refers to natural disasters like hurricanes or floods that are difficult to prevent. Answer. B. It involves an insured taking extra risks because they know they are covered by insurance. Explanation. Moral hazard occurs when a person is more likely to engage in risky behavior because they know they are covered by insurance. This can lead to increased claims and higher insurance costs. While the other answers are incorrect, a moral hazard is not related to physical damage from an insured event. C. The term moral hazard refers to behavior, not coverage amounts. D. Natural disasters are external events, but moral hazard is about behavior influenced by insurance coverage. Question 24. What is the maximum liability limit for a business under Standard Commercial General Liability (CGL) insurance policy? A. There is no maximum limit under CGL policy. B. The liability limit depends on the specific terms and conditions of the policy. C. The liability limit is fixed by the insurer and cannot be changed. D. The liability limit is determined by state regulations. Answer. B. The liability limit depends on the specific terms and conditions of the policy. Explanation. The liability limit under a Commercial General Liability (CGL) insurance policy can vary based on the terms and conditions negotiated in the policy. The policyholder may choose different coverage limits based on their business needs. While the other answers are incorrect, while some policies may offer substantial coverage, a CGL policy will have a maximum liability limit based on the policy agreement. C. The liability limit is customizable based on the policyholder's business needs and insurer offerings. D. The state may regulate minimum coverage requirements, but liability limits are typically set in the policy agreement, not by law. Question 25. Which of the following is the primary purpose of subrogation in insurance? A. To allow an insured to recover their deductible from the insurer. B. To transfer the risk of loss to a third party. C. To recover the amount paid to the insured from a responsible third party. D. To provide additional coverage for specific types of losses. Answer. C. To recover the amount paid to the insured from a responsible third party. Explanation. Subrogation is the process by which an insurer seeks to recover the amount paid to the insured for a claim from a third party that is responsible for the loss. It helps the insurer recover funds and reduce the cost of claims. While the other answers are incorrect, a subrogation is not about recovering the deductible, it's about recovering the total claim amount. B. Subrogation does not transfer risk, it allows the insurer to recoup funds. D. Additional coverage is usually provided through endorsements or riders, not through subrogation. Question 26. Which of the following best describes the actual cash value, ACV, of property? A. The cost to replace the property with new materials. B. The cost to replace the property minus depreciation. C. The amount the property would sell for on the open market. D. The total replacement cost of the property, regardless of depreciation. Answer. B. The cost to replace the property minus depreciation. Explanation. Actual cash value (ACV) is the replacement cost of an item minus depreciation. It reflects the value of the property based on its age and condition as opposed to the full replacement cost. Why the other answers are incorrect. A. This describes replacement cost, not ACV. C. The open market value may not reflect the actual depreciation of the property. D. This describes replacement cost, not ACV, as ACV considers depreciation. Question 27. Under Georgia law, which of the following is true regarding uninsured motorist coverage? A. coverage is mandatory for all drivers in Georgia. B. Coverage is only required if the driver has a history of accidents. C. Coverage is optional and can be rejected in writing by the policyholder. D. Coverage is automatically included in all auto policies. Answer. C. Coverage is optional and can be rejected in writing by the policyholder. Explanation. In Georgia, uninsured motorist coverage is optional. However, if the policyholder does not want this coverage, they must reject it in writing. If not rejected, it will be automatically included in the policy. Why the other answers are incorrect. A. Coverage is not mandatory unless it is included by the insurer and not rejected. B. Coverage requirements are not based on accident history. D. Coverage is not automatically included unless specified in the policy and not rejected. Question 28. Which of the following types of insurance would typically cover damage to personal property in a renter's apartment? A. Homeowner's insurance. B. Commercial property insurance. C. Renter's insurance. D. Auto insurance. Answer. C. Renter's insurance. Explanation. Renter's insurance typically covers the policyholder's personal property in the event of damage from risks like fire, theft, or vandalism. This type of insurance is specifically designed for renters. Why the other answers are incorrect. A. Homeowner's insurance covers the policyholder's home and personal property, but it applies to homeowners, not renters. B. Commercial property insurance covers business property, not personal property in a rental situation. D. Auto insurance covers vehicles, not personal property within a rented home. Question 29. Which of the following is a key characteristic of liability insurance? A. It covers damage to your own property. B. It provides coverage for injury or damage you cause to others. C. It only covers property damage. D. It covers medical expenses for your own injuries. Answer. B. It provides coverage for injury or damage you cause to others. Explanation. Liability insurance covers the costs of injury or damage you cause to others. It can cover bodily injury, property damage, or personal injury claims made against you. Why the other answers are incorrect. A. Liability insurance does not cover damage to your own property. It covers others' claims. C. Liability insurance includes more than just property damage. It also covers bodily injury and personal injury claims. D. Medical expenses for your injuries would be covered by health or auto insurance, not liability insurance. Question 30. What does comprehensive coverage in an auto insurance policy typically cover? A. Damages resulting from a collision. B. Injuries sustained in an accident. C. Losses due to fire, theft, or weather-related incidents. D. Liability for damage caused to another vehicle. Answer. C. Losses due to fire, theft, or weather-related incidents. Explanation. Comprehensive coverage covers damage to your vehicle that is not caused by a collision. This includes incidents like theft, vandalism, fire, falling objects, or weather-related damage such as hail. Why the other answers are incorrect. A. Damages from collisions are covered under collision coverage, not comprehensive. B. Injuries sustained in an accident are typically covered by medical payments or personal injury protection, not comprehensive coverage. D. Liability coverage is separate and covers damages you cause to other vehicles, not your own.